Loans can solve problems, but they can also create bigger ones. What feels like help today can become long-term financial pressure. Many people enter loans without understanding the consequences. If you're not careful, loans can easily trap your financial future. Loans often feel simple, fast, and helpful when you first take them. The approval process is quick, and the money becomes available almost instantly. This creates a strong sense of relief and satisfaction. Many people focus only on this short-term benefit and ignore the long-term responsibility. Because the beginning feels easy, the risk is underestimated. Over time, repayment obligations begin to affect your income and lifestyle. What once felt like a solution slowly becomes a burden. Easy access creates a false sense of control and affordability. Without awareness, spending increases beyond your capacity. This leads to long-term financial pressure. Understanding the full journey of a loan is essential before taking it. What starts easy can become heavy if not managed properly. Short-term comfort often hides long-term consequences. Smart thinking begins before borrowing. Every loan comes with fixed monthly payments that must be made consistently. These payments reduce your available income every month. Over time, this limits your financial flexibility and freedom. A portion of your money is already committed before you even receive it. This makes it harder to save, invest, or handle emergencies. As obligations increase, your choices become more restricted. You begin to focus more on survival than growth. Financial pressure increases as flexibility decreases. Loans slowly take control of your cash flow. This reduces your ability to make independent decisions. The more payments you have, the less freedom you feel. Reducing obligations increases financial control. More control leads to better opportunities. Freedom grows when commitments decrease. Interest is the hidden force that makes loans more expensive over time. It increases the total amount you need to repay beyond the original loan. Even small loans can become large due to interest accumulation. Many people focus only on monthly payments and ignore total cost. This leads to poor financial decisions. Over time, interest quietly increases your burden. The longer the loan lasts, the more you end up paying. This deepens the financial trap gradually. Interest does not create value. It only increases cost. Understanding interest is essential before borrowing. Lower interest reduces pressure while high interest increases risk. Ignoring interest leads to long-term problems. Interest grows silently but powerfully. Awareness protects you from hidden costs. Taking loans for the wrong reasons creates serious financial problems. Many people borrow for lifestyle upgrades, comfort, or emotional satisfaction. These purchases do not generate any financial return. This means the loan becomes a pure liability. Over time, this creates financial pressure and regret. Borrowing without purpose weakens your financial position. Emotional decisions ignore long-term consequences. This leads to repeated mistakes and growing debt. Smart individuals borrow only when there is clear value or return. Loans should support growth, not consumption. Discipline helps you avoid unnecessary commitments. Right reasons create stability and control. Wrong reasons create stress and instability. Purpose determines whether a loan helps or harms you. Having multiple loans increases complexity and financial pressure. Each loan comes with different terms, interest rates, and payment schedules. Managing all of them becomes difficult over time. This creates confusion and reduces your control over finances. Missing even one payment leads to penalties and added stress. Many people take new loans to manage old ones, creating a cycle. This cycle becomes harder to break as debt increases. Financial clarity disappears when too many obligations exist. Over time, this creates mental and financial stress. Simplifying your financial structure improves control. Fewer loans are easier to manage effectively. Less complexity leads to better decisions. Control improves when obligations are reduced. Simplicity creates financial stability. Delaying loan payments may seem like a small issue, but it quickly becomes serious. Late payments add penalties and extra interest to your balance. This increases your total debt and makes repayment harder. Over time, repeated delays create financial stress and pressure. What could have been manageable becomes overwhelming. Many people delay payments thinking they will recover later. But delay increases cost and difficulty. Consistent payments are essential for staying in control. Discipline in repayment keeps your financial plan stable. Without discipline, debt grows faster than expected. Timely action prevents long-term damage. Delay creates financial pressure. Consistency creates control and stability. Relying too much on loans creates a habit of dependency. Instead of building your own financial strength, you depend on borrowed money. This reduces your ability to grow independently. Over time, this habit becomes normal and difficult to break. You begin solving problems with more borrowing instead of better planning. This creates a cycle where debt keeps increasing. Dependency reduces confidence and financial control. It limits your ability to save and invest effectively. Smart individuals focus on building their own resources. They use loans carefully and only when necessary. Independence creates long-term stability. Dependency creates stress and limitation. Self-reliance strengthens your financial future. Taking a loan without proper planning increases financial risk significantly. Many people borrow without understanding how it fits into their finances. This leads to poor decisions and unnecessary pressure. A strong financial plan helps manage loans effectively. It ensures borrowing aligns with income and goals. Without a plan, money is used without direction. This creates confusion and reduces control. Over time, this leads to instability and stress. Planning allows you to use loans wisely. It keeps your actions structured and intentional. Loans should support your plan, not replace it. Structure improves financial outcomes. Planning protects long-term stability. Clear direction reduces financial mistakes. Many people take loans based on emotions rather than logic. Stress, pressure, or desire can push you into unnecessary borrowing. Emotional decisions ignore long-term consequences. This leads to poor outcomes and increasing debt. A strong mindset helps you stay calm and think clearly. Logical decisions reduce risk and improve control. Borrowing should always be based on need and purpose. Over time, emotional discipline protects your financial health. It helps you avoid unnecessary commitments. Controlling emotions is essential when dealing with loans. Clear thinking leads to better financial choices. Emotions create mistakes and regret. Discipline creates stability and control. Rational decisions build long-term success. Loans do more than create pressure. They limit your ability to grow wealth. Money that could be saved or invested is used for repayments. This slows down your financial progress significantly. Over time, this leads to missed opportunities. While others build assets, you manage liabilities. This creates a gap in long-term growth. Reducing loan obligations frees up resources for better use. It allows you to focus on building wealth instead of managing debt. Growth requires available money and flexibility. Loans reduce both. Less debt creates more opportunity. More opportunity leads to financial progress. Freedom grows when obligations decrease. Growth begins when debt reduces. Loans are not always harmful. They become dangerous when used without control. Smart borrowing is based on purpose, planning, and discipline. It focuses on value instead of convenience. When used wisely, loans can support growth and opportunity, but without awareness, they create long-term problems. The key is to stay in control at all times. Understanding interest, repayment, and purpose is essential. Over time, disciplined borrowing protects your financial stability. Avoiding mistakes is as important as making good decisions. Your approach to loans shapes your financial future. Control your borrowing, and you avoid the trap. Smart decisions build long-term strength. Discipline creates lasting financial power.